In this video, let's take a look at the non-usable code field. You notice non-usable code is simply a number. And when we come into a data set like this that has a lot of rows and a lot of columns, and we see something like this, an abbreviated field name, simply a number, it's an indication we probably need to do some research to understand what this data is telling us. One of the tasks that you did earlier in the project was to take all of these non-usable codes and layer in a non-usable code description. And if you recall, you came to page 639 of our New Jersey Assessor's Handbook, and this document shows the relationship. Now, once we have the relationships established, what we can do is we can layer in a formula. And what I'm going to do on the screen here is I'm going to model how we can layer in the description to be right next to the code. I'm going to right-click on my column header next to the non-usable code, and I'm going to choose Insert. And now what I'm going to do is I'm going to use my VLOOKUP. And there we go. I'm also now going to copy down, and I've copied in all of my non-usable code descriptions. Now let's take a look at what this data is telling us. And if you notice, some of these descriptions are actually cut off. So what I'm going to do is I'm going to have to manage my view here. I'm going to use the wrap text feature to wrap my text. And now what I can do is I can see a non-usable code description layered next to each code. Now this is a good example of how working with the data and simply understanding that there's this relationship between code and description, and then having to do the work of bringing in this descriptive data, it can actually help inform us about the technical nature of the data, meaning what is this non-usable code data point, why is it important, and how are we going to use it in our analysis. Let's go back to our Assessor's Handbook and we'll see that we have a description explaining this. What it says, the D transactions of the following categories are not usable in determining assessment sales ratios. And essentially what this is saying is that non-usable sales cannot be part of our analysis. Property transaction has a non-usable code associated with it. It is a sale that is considered not a third-party sale, and therefore it cannot be part of our overall analysis. Now let's just look at one example. Let's use non-usable code number 1 as an example. This is a sale between members of the immediate family. So this is an example. I'm a mother and I have a son and I want to transfer ownership of the home to my son, and I sell the home to my son for $1. And what we've done is we've had an official real estate transaction, but the actual sale price is not meaningful. It's not a real true market value. Let's go into our data set and let's filter for all transactions that are sales between members of an immediate family. We can see a mix of different sale prices. We can see some that are for $1. We can see others, though, that appear to be possibly normal prices, $325,000, $200,000, and so on. But what the tax database is telling us is that these sale prices are not usable because they are sales between members of the immediate family. Now this gets into a little bit of what you learn in business law in terms of what makes a third-party sale, the idea of related parties versus third parties. Now for purposes of our project, we do not want any record that has a code in this field. For purposes of this illustration, I've simply tagged the description here as a usable sale. More to come on that next step, but this was a brief overview of non-usable code.